Eric Clark, Flagstar TPO, and I appreciate you joining me as always for my open office just to learn a little bit more to continue to do more. I'm Eric Clark from Flagstar, 31 years experience at Flagstar alone, formerly originator, and surviving at this game for quite some time. Turn times are fantastic at Flagstar, so check them out. Submit a loan, TBD. If the market's going to have these ups and downs, we've got extended locks and we have float down locks. So options for you. And there's always learning available at the Flagstar Training tab. Right here on the main page or many of the pages that you visit, we realize that the market's changing. People are being forced to utilize products and services that they maybe aren't quite that familiar with. So you got to get up to speed to be a real, true mortgage professional and to know the government loans, all of the different flavors of governments, USDA, FHA, VA. Then we've got non-agency portfolio type options in the Advantage non-QM realm. Lots more coming there too, because some good news. I don't know if you heard, but Flagstar Bank posted earnings $1.41 a share, which is pretty strong. We're happy that we're earning money for our shareholders and getting solid and comfortable. But even more importantly now is that we're merging with NYCB. All approvals are done and over with. It's pretty much official that December 1. Any stockholder of Flagstar that has about 1.5 shares will end up with 4 shares of the new company, which is going to be Flagstar Bank and National Bank. We're just not a federal savings bank anymore. So things are going to get interesting because we are going to be extremely well capitalized and looking to utilize that capital in, lending options for you and your borrowers. To learn the depth of this kind of process, you want to come to our Star Academy. You can put in construction loan, bank statement loans, HELOC loans, e-closings that we've been doing for quite some time now, hybrid e-close, Advantage bank statements, the underwrite process, and there's going to be some more non-QM options coming as well. Just checking to see if anyone's trying to get into the meeting. So anyway, new mortgage clause, make sure you've taken note of that. It's right on the home page if you haven't as you're coming into closing. Let's take a little update. Thursday is usually a memo day. So it's 11/10, which was the Marine Corps birthday. Happy birthday, Semper Fi, but I'm not an alumni of any service. I just appreciate those that put it on the line for us and our protection in this country. 11/10, HomeReady and Home Possible has gone through some more improvements. Do you remember this loan? 80% of median income. Do you know your median incomes, by the way? Here's a quiz that each and every one of you ought to be able to answer about at least 3, maybe 4 of the major metropolitan areas that you service. What is the average median income? AMI is the abbreviated format, acronym for it. For instance, if you were in Detroit, it's 90,800. If you were in Ann Arbor, it's all the way up to 117. La-di-da. Lansing's at 86,000 for the AMI, and Grand Rapids at 88,000. Those that are at 80% of those income levels in that marketplace, and you ought to know your marketplace, are eligible for the Fannie Mae HomeReady and the Freddie Mac Home Possible. These are pricing considerably better because they've taken away all Fannie Mae Freddie Mac adjustments to encourage affordable housing. This option is getting cheaper and cheaper. It's a good 0.5 to 5/8% better than a conforming rate, and it has discounted mortgage insurance. Maybe what we'll do here is price one of these super fast. You go to price a loan, bam, price a loan, it goes in. I've got to put in a seller ID, but you would not have to do that. Conventional purchase, fixed, best efforts. We're going to say 680 FICO scores, 680 FICO. Purchase price, we'll call it 400,000. And we're going to just do a 97 LTV. And the key factor for getting the right product to come up is to indicate it's a HomeReady, it's a Home Possible. This is Fannie Mae's 3% down, Freddie Mac's 3% down is the Home Possible. So we're just going to do it with the HomeReady. Let's get a quick price. It's got to have a DTI. Price tiers. I'm just going to say my home state. Get started. And we get the HomeReady product returned. If I go down to this comp plan here, I got 6.587, 2.5, 6.612, 2.5. We can always find out in price quote what the MI rates are. $223. Now, if I go back to the criteria, get rid of that. So we're at 6.5 with $233. Now I'm going to say not eligible for these programs that have the caps on pricing, and they requires 80% of AMI, remember, to qualify to be on this product. Fannie Mae fixed rates. We're going to go here. And we were looking at 6.5. Now I got to go all the way up to set. It's a point better. And the MI factor, I'm going to guess, is considerably less as well. $300 versus $270 there. A point in interest rate is a huge amount per month. So huge differences to utilize the right program. The other thing is, if you've got some young industrial people that are interested in possibly gathering real estate and starting their Airbnb empire early on in life, here's my suggestion. Talk to them about while they're under the median income and just getting started. Don't just go buy themselves a home. Buy themselves a multi-unit. Let's say a 4-unit loan. And so we'll go down, and your best bet for the multi-units on this particular deal is going to be, just because I know, the Freddie Mac Home Possible. Remember, it's on income limits. Inside the program description, you can find where to search your local market's parameters for what the AMI is and what 80% of it is for this program. But here's the Freddie Mac, what I like, 95 LTV on a 2 to 4 unit. Pretty cool. Now I rent out 3 of them, pay my own bill. Then when I move on in life to something else, I start renting that 4th one, or I turn it into a rotating Airbnb, depending on where you are, some kind of recreational area. Anyway, just a suggestion related to that memo that was out there. And again, there's better pricing on that now due to some Fannie Mae and Freddie Mac adjustments from the FHFA's direction. And affordable housing, look more and more for the affordable programs to get better and find ways to artificially create more interest from a buyer, borrower, and the realtor's use point of view. Because affordability is one of the largest issues besides currently inflation facing America. And part of that housing is driving up that housing of affordability is in that inflation number. USDA, what's happening over there? This is another median income based deal. You want to learn more? There's the handbook, HB 13555 is kind of the Bible, the 4155, if you will, which is FHA's Bible, or all regs conforming guidelines. everybody's got their own lending rule set. What's happening here? Student loans for the ratios, which you're supposed to be 2941 on typically, but they are saying even if there's a zero on the payments, you are either going to use the name amount or one half of the outstanding loan balances for student loans. So you're always going to get a payment of a minimum 0.5% of the outstanding balance. Automobile expenses, they're saying, hey, you can use automobile expense, but you put that in the income category and you leave the debt and the debt ratios, and you make sure that the debt ratios are calculated with that factor. When you get a refer manual, in most cases on all Govy loans, Flagstar does a great manual underwrite. USDA is a little weirder that for a manual, you got to have a 680 FICO. And you only, even with the compensating factors, only get to a 3143, I think, is the ratios they suggest in the extensions. Here, I got it in my notes. 2941 is the manual. With a 680, you could go to 32/44. Excuse me, I misspoke. But in compensating factors, you should have some reserves. It used to say that you could also have no payment shock, and that was a compensating factor. That's out the window. They don't care. Again, check the handbook for USDA if you want to be a true mortgage professional, and make sure you are aware. A huge, like 90% of the country is eligible for USDA is geographically. You can get those maps by Googling. But the big thing is 80% of AMI is the other qualification. And when you show us your assets, they're going to grind over those assets to make sure there's not a household income that's coming in that should go into that median income cap. USDA, though, very flexible. That's the only other bastion for 100% financing. So you got your VA loans, which you all should be doing. I'm actually going to scoot over to that in a second at 100%. How do you qualify for that? You got to be a veteran. And every veteran gets that benefit, and every veteran can use that over and over. We'll talk about this in a second on VAs at 100% financing, which also does cash out at 100%, and does jumbos to $4 million. All exciting stuff on VA. Thank you, veterans. Chapter 11 of USDA handbook we talked about is the 100% financing, 580 minimums. There is a MI amount of 1% up front, 35% monthly on the USDA. VAs, though, do not have any monthly payment whatsoever. Let's take a little bit of a look. Since it was November 10th was Marine Corps birthday.
Department of Veteran
November
Affairs
11th
guaranteed
was Veterans Day. And November 13th, Joe Walsh and the James Gang welcomed the Breeders, Black Keys, 9 Inch Nails, with Dave Grohl was also on hand. Great concert, Vet Aid, benefiting Ohio veterans. Joe Walsh organized a great event. But anyway, that brought me to Columbus and brought me to some of these thoughts that I'd like to share with you right now. Always check me out on YouTube if you
behind VA financing. These loans are here to make a difference. There are lots and lots of misconceptions about VA financing. VA home loan is a benefit that's been earned. 33% of veterans didn't even realize that they had this benefit. Yeah, they got a little debriefing in their discharge, but they didn't understand. Many of them thought they could only use the VA benefit once. Not true. Many realtors judgmentally think that there's issues and there's problems on a VA loan. Quite contrary, the qualified borrower average for a veteran is much higher. I don't want to pigeonhole who is a veteran. There is no set demographic. These are prideful people that served our country, disciplined, and they've earned this benefit. Make sure you're serving our veterans And don't assume they're one particular role or not. Always inquire whether you can pull out the VA card for benefits. There's benefits to doing VA financing. OPM, other people's money, 100% financing, offsets a lot of the mythical concerns that people have. This 100% financing allows some makeup opportunity with assets that borrower does have to make up differences on tough transactions, rough appraisals. Speaking of appraisals, the myth that there's big issues and problems on a VA, actual myths that are dispelled, and with the Tidewater Act, you'll have your appraisal in 14 days. If there's going to be issues, you have chances to throw in additional comps and warnings prior to it just being thrown out to the senior appraisal reviewer, SAR. Anyway, VA has lots of flexibility. It's a benefit earned. VA is charged with giving an easy access to loans and home purchasing to the vet. They're not complicated as far as rules. They're kind to the veteran, made to finance a veteran. Make sure you're helping out veterans, and remember those that gave the ultimate sacrifice. Sure, you're making note of the answer in the declarations, have I served in the military, and explain to every borrower what that may make to me.
So anyway, I appreciate you checking that out. I highly suggest a visit to Columbus. What a great town. National Veteran Memorial. And go over to YouTube, check me out, Eric Clark AE Info. There's a whole catalog of information that's helpful learning and hopefully a little bit fun to watch occasionally. So check me out there. Anyway, back to announcements. Standalone home equity HELOCs has gone through a little bit of change. Number one, disputed credit. Disputed trade lines. If you've got a disputed item, it's still going in the debt to income. You got to solve that dispute if you want to get rid of the payment. So get it cured, no longer have it under dispute, and have the correct reporting done. And we will go that way. Again, if you want to ignore a piece of credit, remove the dispute, make sure it's finalized. Liabilities, obligations to be considered as possible reoccurring debt may be identified as sources included, but not limited to the application, credit report, pay stubs. So any kind of documents that show withholdings, that sort of thing, that's going to identify a debt on the HELOC. Unacceptable sources of income comes down to weed is no good. Crypto cash is no good when you're generating your earnings on the crypto market. So keep that in mind. That's on the HELOC. That's on a growing amount of stuff. Borrower employed by family member on the HELOC, you're going to need to get 2 years tax returns for the borrower if that's the case. If there's any job gaps, we're okay if you got somebody that can show me that they're seasonal employment and they're going to have gaps here and there. Their landscape or whatever it is, as long as it makes sense in the field. You should be able to handle that. Income received from secondary employment, multiple job sources, there may be no gap greater than 30 days. So got to have year over year, two part-time jobs, at least a year, and you can't have gaps in that, or usually 2 years actually, but you can't have a gap greater than 30 days in the 12 months, or you're not proving that you can handle working 2 jobs simultaneously. New to the workforce, then you've got to go back and track a 2-year history that they've been doing something for their own good, attending school training programs as part of their timeline of employment. You have to dock that essentially. All right, so the freebie's over. We were doing 10,000 minimum lines for a while. That is now going, the minimum is now going from 10,000 to 50,000. All right. And the draw must be at least 50,000, or if it's a larger draw, 50% of the full line amount requested. So, if you had a $500,000 draw, it's easy to say, well, 50, you got to take at least 50. But if you had a $500,000 HELOC, you've got to draw about 250 is a requirement. just keep that in mind as you're moving into these HELOCs. Make sure you guys in Michigan have your second mortgage licenses. Um, it's still a great product. We found that the average HELOC was opening a draw line amount of 87,000 initial draw, and the line itself was over 100,000. So it still kind of rings in like it's going to work out. But just keep that in mind as you utilize the HELOC. And if you don't know enough about the HELOC, seller's guide, we always go to products, non-agencies, all our non-QM stuff that's out there now. You got to start learning that. But our second lien product, home equity, 90, well, not 90, a shade shy of 90 is CLTV, 89.99 to 500,000, minimum draw now of 50 grand, or 50% of the total line amount, and minimum credit score is still 680, 45, and second homes with 700 FICOs, also that 45 back, and it's 80 LTV when you're dealing with second homes. No manufactured homes on this product, although we are pretty kind across the board on manufactured homes. Well, keep learning more so you can do more. Remember our resources. We've got marketing material and ad slicks that can be customized and set up for you. Make sure even in the disclosure phase when you're doing a loan, that you've got your portal, your consumer portal is customizable. Your logo can go in there, your messages, your contact information, all can be on there for your company. But we also have ad slicks that can add your logo and information. At the bottom of this area, it kind of goes into how do I do that, right? So keep learning. Keep bringing business. We appreciate it very much. And if you need a hand, there's the support desk that's open till 9 p.m. every night. Underwriting desk, conforming, MI, whatever. Secondary marketing is lock desk, appraisal, and tech support. Hey, I'm stuck with something. They're open till 9 for assistance. All I need to know, this phone number and your seller ID to gain access to all this assistance. And don't forget, learn more to do more. Check out the Star Academy, and it'll help you grow as a mortgage professional. All right. Thanks. Have a good day. Make it a good week. Remember your veterans, and coming up here, we're fastly sliding into the holidays. So watch your rescission periods. There's going to be a few more people on personal time off, but enjoy your family. But watch, the year is going to kind of tick away with all the holiday celebration and all. Enjoy it. 2022 has been quite a year. Take care, folks. Thanks for the business.